Hey everyone, welcome back to another episode of the How to Property podcast. This morning I have my good friend Harvey Andrew on, who will introduce himself in a second, but Harvey is a master at managing properties remotely. He invests in an area that is a few hundred miles away from where he lives and has built up an incredible portfolio doing that. So really going to pick into his brain around the systems and the processes of how he's done that, as well as the motivation and everything else that's going on in his life at the minute. So Harvey, welcome, my friend.
Thank you very much for having me, Ryan. I feel privileged making it onto your podcast. So thanks for the invitation.
No, I do have one question to ask you because this bugs the hell out of me. How many times do you get called Andrew?
Probably maybe once or twice a week when I speak to my mum, and that is it. It was weird as well. It's one of those things. It wasn't a conscious decision for me, but from school, do you know at school, like you've got some kids that get called both by. I bet sometimes you got called Luke, and sometimes you got called Ryan.
All the time.
Yeah.
All the time.
But for me, for some reason, I didn't get the mixture. It was just purely Harvey, even to the point of teachers, friends, parents. Only Harvey. Then it got to a point when I was about sort of 20, 25, and people would hear my first name and go, I didn't even know that was your first name. And they'd known me like for 10 years. And then when I started networking, like and got out there networking, I think about 2014, late 2013, I went out networking to network events. I started introducing myself as Andrew because obviously that's my name. And I can't comprehend this. I can't comprehend this myself in my own head either, like the logic behind this. But it actually feels weird when people I get along with call me Andrew because nobody calls me it. Like for the last sort of, I'm 43. So since the age of 6, I've been called Harvey by absolutely everybody apart from my mum and my sister. And yeah, so it was weird. So when I was introduced myself as Andrew, then I'd bring a few friends along, they'd call me Harvey, and everybody was, I thought, you know what, I'm just going to make this conscious decision to call myself Harvey to everybody, introduce myself as Harvey. And yeah, and that's where we're at. As weird as it sounds, I can't work it out, but yeah.
I mean, obviously, I've got 2 first names, and like it probably doesn't help that I wear hoodies saying Luke on the front of them, you know, with Luke Holmes. But everyone calls me Luke as my first name. I was in a meeting the other day with a potential development I'm buying, and with the owners, and he just constantly kept calling me Luke. This old boy, he's like 73-year-old, and I could see the commercial stage. And afterwards, like, I'm really sorry, my client kept calling me by the wrong name. I was like, honestly, I get it all the time. Don't worry about it. I blame my parents for choosing 2 first names.
That's it.
Well, anyway, let's get down to business. So, you are a single-let landlord predominantly, and you've built an incredible portfolio up in my area, my neck of the woods, or you Southerners like to come up here. What was the decision to do that in the first place? What made you want to do it from out of area?
Yeah, so easy answer to it. I'll explain the reasoning behind my easy answer. It was just the cost and the returns. It's like night and day. Like unless you want to do bigger developments and bigger stuff. Like just straightforward single let properties is no comparable buying one locally than remotely. So it was just cost. So the first thing I ever done, I bought a piece of land and I wanted to develop two 3-bedroom houses. So the first deal I ever done was a piece of land. At the time, I'd never read a book. I'd never been on any seminars, done anything. I just used my instinct. I'd always been around kind of business, but just used my instinct and bought a piece of land when I wanted to get into property. And it sounds glamorous, but it wasn't. I'd lost money on that piece of land. It was my ambition was way above my skill level at that time and my courage. I remember going to the auction, sticking my hand up, going, yeah, on the first, like literally it felt simultaneous as my hand went up, the hammer went down and I'd won this piece of land. I was like, wow, I wasn't expecting that. And it was on my maximum bid. The first bid I got accepted was my maximum bid as well. And once I had it, I was really procrastinating, like, because I was scared. Like, it was the first thing I'd done. Like, it was really overwhelming planning. And then I started moving forward with it and got loads of issues with planning and everything. And yeah, but I ended up reselling it at a loss. But that loss was probably about 5 years later. And it was at a point when I needed some money. So it took a little while to realize how much I'd lost on it. And so I'd done deals in between that give me motivation to keep moving forward. But then I've done my second deal. Like I was born in London. I'm really proud of being born in London, born in Plaistow Hospital. But from the age of 6, we grew up in a little village called Aveley, still on the inside of the M25. But it's the first, like when London stops here and Aveley starts here. So it's the first one in Essex. And in this little village, I know that inside out. So when people say only invest within an hour from where you live, that's fine if you live in a place that's investments are worth doing. So the area I knew inside out, knew the streets inside out, was Averley, because I grew up there from 6. But it wasn't an investment location. But again, off a natural instinct, I went to Southend. This is the one we're talking with you about at the moment. I went to Southend, which was within an hour. But I didn't know that any better than I knew Stockton-on-Tees, which is 4 hours away. And it turned out I bought this property. I didn't do enough research at the time. You don't know what you don't know, and I wasn't as diligent as I maybe could have been. But I just went off. I was hungry. I bought a piece of land. I bought this development. I bought this flat in Southend. And to be fair, I didn't even know what a yield was at that point. I didn't know all the terminology. I didn't know what buy, refurbish, remortgage was. I literally just dived in, started buying houses, worked it out as I went along, and bought this flat. The agent went to me, yeah, it's fantastic. It'd be a great rental, blah, blah, blah. And I moved my friend in. Luckily enough, I moved my friend in because literally after we moved in, we realised, I found out there's a road called York Road, which was about 5 roads up. And it's a real notorious red light district. And not like the Amsterdam red light districts you might think of, like cool, trendy bars. This was heroin addicts walking the street at night to get their fix. And they're walking past my flat at night. Then to top it off, because I didn't do enough research, which I probably could have done better, I'll hold my hands up to that. 4 doors up from this flat was a drug rehabilitation centre. So the same ladies that was walking the street at night time for their fix would turn up in the morning to get their rehabilitation. Luckily, I moved my friend in. I think he secretly liked these ladies wandering around, and he stayed for about 6 years. He probably hated me for. I know he's not on social media, so I always say that. It's probably more of a joke, but yeah, he stayed there for a while. But it really made me realise that, wow, I didn't know Southend any better. But then I met a guy from Stockton-on-Tees. He moved down, so I bought a few properties and run out of money. So I done my piece of land, 2 deals. My second deal, I'd learned how to do my second buy-to-let. So my third deal, I'd learned how to do the buy, refurbish, remortgage. Just stumbled across it with a broker. He said, there's a product out there that you can get a light refurbishment mortgage on. I was like, oh, that's fantastic. But that second deal, I remember, so I started off with a pot of about 80K. And this was in 2009. So the houses were half the price down here as well. And I'd run out within 2 deals. I only had a little bit of money left. Then I went on internet and started studying a little bit. My first time being on the internet. And I come across a guy called AJ, who's from Romford, which is Greater London, but it's only about 15-minute drive from where I grew up. And he was buying properties all over the UK for less than I was paying on the deposits. And I was like, and he kept on talking about yield, other people's money. And I was like, wow. Dubious of him because I've never been on the internet. It seemed too good to be true. But prior to that seed, because he was buying them all around the country, and then he was saying about using bank money and everything like this. And I remember the bank ringing me up. I just bought my second flat. I was out of money nearly, and the bank rang me up and said, "Would you like a loan?" And I was thinking, oh, this is the guy who's talking about this. I was like, yeah. And because I said it in that tone like that as well, that's infectious. Like, you're just smiling then when I said it. The guy on the end of the phone laughed as well and went, what do you want it for? I said, I'm buying a house from a portfolio. I was really excited. And he was like, what do you mean? I said, yeah, from a portfolio, even though I only had one house. And I didn't know anything about fake it till you make it then. I had one house and one piece of land. I was going for a portfolio. And he was like, look, if you said that was for a car or a kitchen for your house, we could have loaned it. We can't do business loans on a personal thing. And he said, I can't even change that now because these calls are recorded. He said, but I tell you what I can do. I can call you back. I went, Joe, what, mate? Call you back. I knew what he meant. And by the way, disclaimer, you're not allowed to take personal loans for doing business. I felt comfortable with it because I knew I could pay that loan even if what I'd done didn't work. I've paid it back to this day. Probably own about 6 properties off the back of that one loan as well to this day from the buy, refurbish, mortgage. But I'm not encouraging anybody. I was happy to step into that grey area, and I felt that was okay because I knew I could pay it. But don't follow me to do that because you're not allowed. But either way, hung the phone up within a second, ring, hello, bank here, would you like a loan? Yes. How much would you like? 25K. Bang, money was in my bank within 10 minutes. And within a week, I had another offer accepted. As I said, on this second buy-to-let, I learned about the buy, refurbish, remortgage strategy, but from a broker saying we can get a light refurbishment product. But I put 40-odd-K in, so I had about 15K left, put 40-odd-K in, this was locally, and I got 11K back out. And I was like, okay, where do I get my next money from? You know, like the bank ain't gonna keep on ringing me up every week for more loans. And coincidentally, I met a guy. He moved down from Stockton-on-Tees and met a girl that I knew. So we started playing golf. And again, do you remember we were talking before this? Just timing. He moved down. His network in Stockton-on-Tees is vast. He's got several businesses. He'd done over 100 property deals as a side hustle. He just bought property because his businesses was doing so well and he's entrepreneurial. Yeah, he's got several businesses, loads of commercial. So his chant, he's so in demand. When you go to Stockton with him, everybody knows him, everybody likes him, really, really well-respected guy. His phone rings every 2 minutes because he's just got so many businesses. Everybody wants to take him out for lunch, but he moved down here and didn't know anybody. And I knew this girl, we went on a golfing, but I took that opportunity as well. Be fair, I didn't realise, like this girl, I remember her last boyfriend, he told her he owns all these clubs and everything, and I knew people in the area. It turned out he was just a promoter for the club. He didn't own them. So when she first met him, was talking about him, I was thinking, hope she ain't met another one of these guys again. So I met him, and he seemed genuine, but I still was like, not sure. Obviously, he had a northern accent, so there's a little bit of a wariness there with that. But yeah, all jokes aside, I went up with him just took the opportunity I was there. I went up with him, and he guided me into the area. And that's what was the real thing for me. I was like, wow, I know Stockton-on-Tees better than I know Southend. And because I met somebody, it was random, and I took that opportunity. Some of my friends was going, "You're lucky." I said, "Well, he's there. He's not an ogre. Go and introduce yourself to him. Like, I didn't give you his number." But either way, he introduced me to the area. He helped me out, and yeah, that's what got me started in the area. You know, the first deal I bought, I got all my money out. I was like, wow. Second deal I bought, only left maybe 2K in, and yeah, so it was a game changer for me.
It's yeah, I think BRR is a great way to build asset wealth, and as you say, in North for cash flow as well. And then obviously I will convert you at some point, but once you actually start running them as service accommodation units, you can build some proper cash flow. But, yeah. So how what did your, you know, because a lot of my students who maybe are in the north, in the south, sorry, they're kind of like, you know, maybe my area is not right for this, you know, how do I do X, Y, and Z? And, you know, I've got various ways that I sort of coach them on, okay, we need to do this, we need to do that. How were you physically sort of sourcing the properties and then attending the viewings?
So get somebody to attend the viewings for you. That's the key. And again, I can't think of any way to say this. I don't even like the saying, but your network is your net worth, and it's absolutely critical. Our Chance met him. So he went, look, he's got a management team himself, and he's like, okay, we'll just do some viewings for you. Send over I had to find the properties, and he said, send them to me. I'll tell you whether or not it works. And if it works, I'll get one of the girls in the office to view it for you. And I remember the first property, I kept on sending, obviously, when you look at the properties in the north, I remember looking at them, seeing these $5,000 auction properties, these ones for 10 grand. I was like, wow. And taking them out for that first lunch, I said, can I pick your brains? I want to ask around these. He went, seriously, you're just going to buy a headache if you buy them. The natural thing is you are naturally seduced by these cheap prices. Because all I've done is I looked on what housing benefits would pay, which is around £500 a month for a 3-bedroom. I was looking at these 3-bedroom houses for like, it seems too good to be true. And he was like, yeah, it is too good to be true. You said you'll just buy a headache. Even with housing benefits, you will not have consistent tenants in them. You have headaches. So anyway, I started sending him over deals all the time saying, is this good? Is this good? And then one stuck one day. It was 41K. And he went, it's not great, but you would get that away. It's not the best area. You would get away. And I said, look, this is what my budget meets at the moment. And my confidence as well. All I needed is 13K in total to do that deal. So it's like, if this don't work, if he isn't what he says he is, like 13K wasn't going to destroy me. It was all I had, but I knew I could recover from that. I looked at the mortgage cost. I was like, mortgage about £100 a month. The rates was higher then, and the council tax was about £100 a month. So I was like, worst case scenario, even if it sat there, I couldn't resell it. I've got 13K stuck in there. I've got to cover £200 a month. The upside way outweighs that. But having that person now that can do the viewings for you is absolutely critical. That house, she viewed it for me. And as she was walking out, because it's so well known in the area and there was for sale sign up, someone rung her and went, you buying that house? And she went, yeah. She went, can you put me down on the list? And actually that lady rented that house. So before I even bid on anything, the lady that phoned up, because she see the woman that's doing the viewing for me, she she actually was a tenant for about 5 years. I remember thinking, wow, this is easy. I'm going to do loads of this. But yeah, get somebody to do the viewings for you. But do go there yourself, especially if it's the first time in an area. Don't just rely on what other people are going to tell you. Just like go there.
Yeah,
Go.
I think I know I did all my viewings definitely at the start, obviously in my area, which was easier to do. But then as I started to get busier and started to scale, I had some of my cleaners that worked in the SA operations side. I'd basically give them a checklist and a video that they had to shoot, and they went round, got the photos, got the checklist, got the video, and then I'd make offers on that. But what I did do, I did put a layer in there of, if I got an offer accepted, I would then just say to the estate agent, I just need to quickly come out and just give it a once over myself, just, make sure there was nothing missed. But, 9 times out of 10, they were absolutely spot on. They got the information that I needed and everything ticked the boxes. Because I think, whilst I am a massive advocate that you've got to make sure you check everything, the majority of stuff that you look at is fine. There's no problems with it. If it looks like it needs a cosmetic upgrade, typically that's all it's going to need. You're not going to find any massive problems. You're not going to all of a sudden find subsidence, from most of the properties and things like that. So you can, use it in a way to get you on the volume of viewings that you need to go on, even if you're not able to do it yourself. And I think that's definitely one of the keys to scaling. So your average tenant type do you run with the DSS, just being in that area, or is it professionals, or have you got a mix?
A bit of a mix, but my avatar is either, I don't know how to word this without sounding bad to anybody, but I call them high-end benefits. So I don't want social issues benefit tenants who's got like mental health problems. I've got nothing against any of that, or drug addicts or drinking problems. I try not to go for that style ones. I go for high-end benefits, and what I mean by high-end benefit is like families. I like family homes. I say to people, you're going to do it remotely. Try and, especially at the start though, maybe when you build up a network, you can go for other stuff. But at the start, try to get stuff that's going to give you the highest probability of long-term tenants. And the highest probability of a long-term tenant for me is 3-bedroom family homes. So you can get mums that have had a job, but just can't go back to work because they're on a low income and the childcare is too much money. So they end up being on benefits. They're great, and look, we get guarantors with them benefit tenants. We get rent insurance. Mum usually lives 2 streets up, Nan usually lives across the road. And if you do the house to a nice standard and you look after them, they will stay for like 6, 7, 8, 9 years. Like I've got a tenant in one of mine at the moment. She nearly just lost her kids, and it went up in the air. And funny enough, I got advice from you to do that direct claim with the Universal Credit.
Yeah.
Because that was fairly new. Well, when we last looked, you couldn't. You had to get them to claim for it. But yeah, she's been in there for like 9 years, I think it is, something like that. So our profile is typically that type of tenant or lower income tenants, and purely because I find I've got a few properties which is in like sort of the higher end, sort of around 100k, and I like to diversify it because, contrary to popular belief, there has been capital growth even before last year in the northeast. There's micro economies within each climate. As a whole, an average, the northeast since the last crash hasn't grown, but there's micro little pockets in there that are more affluent and spots. But I find, for instance, our typical purchase is usually a sort of around 50 to 70k. But I find if I buy 100k, you're going to get definitely professional tenants. But the thing with that is then professional tenants, the house might be worth 130, like sort of 150 once you've done the work to it. But the problem is, the challenge you'll get with that is you'll get higher turnover with them tenants because the deposits are so low, because the rent is still relatively low. They can save up for a deposit themselves. You find in 18 months' time, they've got a homeowner mindset. And in 18 months' time, they've bought their own home because they can buy one for 120 themselves, and they've only got to save up a 5-10% deposit. Their rent's fairly low in comparable to their earnings, and you get a higher turnover. So I like low income tenants, ideally, or higher benefits. But I do mix it up a little bit. And as I said, once you get a network, you do wander into other higher turnover stuff as well, just to diversify it. But at the start, I think it's really nice to cut your teeth on the easier stuff and the stuff that's got less moving parts.
Yeah, and I guess as you've built that area knowledge, you understand where those tenants typically live, so therefore where to buy those houses in those streets. And I've got a mix. Probably most of my tenants aren't on any benefits. I've got a few, but the majority are just above that level, as you say. You know that they are. I've got some properties that are next to certain schools, and they were bought for that purpose because I know those schools are great. So people want to be in that area to get their kids into those schools. And you know, there's loads of tactical ways you can buy a house and make sure you are going to get it rented. Like nearly 9 times out of 10, every single time a tenant moves out, you've got someone else going in. It's funny you mentioned about your my first purchase. I had the seller had already found me a tenant. So he's like, I've done it. It wasn't the best purchase in the world. It was already modernized. I thought I was getting a good deal. It probably wasn't the best deal. I actually never refinanced that property because by the time it was due, I had other things going on and the cash flow was coming in. So I didn't feel like I needed to. And but I didn't buy it right in terms of the BRR, but you don't know what you don't know. Or even if you do think you know something, until you've put it into practice and seen it play out, then you don't really, I think that's when you get the true experience. But he did say, by the way, I've got you a tenant. That tenant, he wants to be there forever. Like he was like, can I sign a 10-year contract? So I was like, well, we can't do that, but you know, we can just run it bit by bit. But yeah, so it is interesting. Where I know we've had, you know, a bit of a chat. I know we've been, you know, bouncing backwards and forwards. Where do you see your portfolio now going? Is anything going to change, or are you just going to keep doing what you're doing? Are you going to start sort of diversify a bit? Where do you see yourself going over the next sort of 12 to 24 months?
Yeah, I don't mind diversifying because, as I said, I've bought commercial, done commercial versions, got a few HMOs. I'm definitely looking at the SA. As I said, I spoke to you about that, and I'm just doing my research at the moment. I've got a flat in Southend that's coming up in, I think, about a month or so's time. So I'm just doing some research on that side of it. But I want a provider with that. I'm fully aware it's finding the right people. So if I can't find the right people to do the right things with me, then I'm not really interested. Similar again, if I was to do like the last commercial version I've done, I tried to get the partner on board with it, and he was definitely the right partner in the terms of his experience, and we matched really well because he'd done some more development side of it. So the idea was, look, you can understand development a bit better than I understand it, but I've got a network in the area, and I've got the area and the team in the area. It's quite a good blend, but you just didn't have the time. This is one of the things that people underestimate sometimes when they're looking at JVing with people. You could be more than capable, which he was, but he didn't have the time to commit to it. So it kind of ran out of legs before that. But I feel I'm open to all the options if I can find the right partners. I don't want to learn. I'm not a detailed person. I'm not a fan of sitting there looking at planning applications and all the details of that. That's why I love single lets. Literally, our single lets usually turn around, unless we're having builder challenge or we're going for a new builder, usually they turn around in 2 or 3, maybe 4 weeks, and it's rented out and on to the next one. When builds are taking ages and there's loads of little integrates and you've got to deal with sort of building control and all that stuff, it's just not what I enjoy, you know. And I've done it a few times now, and I'm like, yeah, that's just not where I'm at. So if I find the right partners, I'm really, really open to that. But if I'm not, I'm happy to just steady along with where I'm going. Hence, and this is not me like massaging your ego or anything, the reason I took an interest in service accommodation is because I started networking with you on Clubhouse and online, and I spoke to you, and I realized the credibility that you had. So the only interest that gave me service accommodation was meeting credible people like you. Not, and I said, I'm not trying to blow smoke up your ass, but if I didn't meet somebody I thought was credible, I wouldn't be looking at social service accommodation at the moment. And what you've got to be careful is just trying to spread yourself too thin. All the strategies really work well. So I believe if I focused on any one of those, even if I enjoyed it or didn't enjoy it, I'd make it work. But like, you haven't got time to focus on them all. So yeah, if I find the right partners and the right people I think are capable, then yeah, I'm happy to look at the other areas.
Yeah, I think it's an interesting point you make there, because you know, I've starting to open up a lot more doors. You know, I'm actually going to London tomorrow, as I discussed offline, you know, to further conversations around, you know, working with developers and, you know, very experienced property people who they want to get into this space, but they don't want to know how to put all the systems together and run it and the operations. They more than could, you know, the capability, and of course they could. But, you know, the percentage trade-off to just saying, you take it on, you're the experts, I don't need to understand it, you just do what you do best, and we'll just provide the property. That is a good fit for a lot of people. And I think as you start to grow on your journey, you realize how powerful collaboration is and how much further it can get you, whether it's joint ventures, whether it's just, collaborating on a managed sort of service, whatever that might be. And I'm starting to really understand that, in the last sort of 8 to 9 months, of how powerful that is to move yourself forward and move your business forward. And I think you've got to stop thinking, oh, well, I'll lose 50% if I go JV. It's actually, no, you'll gain more than 50%. Because not only do you get 50%, you'll also gain the knowledge and what they bring to the table and everything like that. But it's a super, super powerful industry. But as you said there, you've got to have the right joint venture partners if that's the way you're going to go, because you've got to be aligned. It's all rosy at the beginning, the honeymoon period. Yeah, we're going to do this and we're going to make all this and blah, blah, blah. But then if you're having to show up at site every day when they said they were going to show up at site every day, you start getting, well, I'm putting all this effort in and you're doing nothing. What's going on? And that's where things can really start to fall down. So I think you've got to get it all in sync on paper, before you go. I mean, and then, touching base on your single let strategy about being quick, I was the same. I think just before COVID, I was doing 10 weeks from keys to refinance. We had it that slick and that quick. And now it's like about 8 months because solicitors are terrible. But that's not because of us or the processes. But I have realized for my model, serviced accommodation, blocks of apartments work incredibly well. So for me, 2021 and beyond is all about multiple units under one roof. So that's all I'm kind of purchasing now. The downside of that, as you alluded to before, is I'm so impatient. I want everything done yesterday. So me having to sit on my thumbs twiddling after I've made an offer and wait 12 weeks for planning is like, are we kidding? And I'm going to buy this building next week. I'm not going to see any cash flow from that if I'm lucky, 12 months from now. So that in itself is, again, another mindset shift that has to happen. But having said that, the year in the grand scheme of things is not a mass amount of time. And once it's finished, this particular project, I will have 16 apartments. Now, for you to go out and purchase 16 apartments would probably take you 12 months, right? If you were doing singly on the BRR strategy, you'd have 16 finance applications, you'd have 16 headaches for solicitors, 16 refinances. And so for me, that kind of mindset shifted. But I do think you can't get onto stuff like this if you haven't done what we've done so far. I think you need all that experience, you need all that, the knowledge, the credibility, even just for the finance, the development finance, they need to see that you've done stuff. So you've got to build it up. And I think, it is super important. Do you have any rent to rent, any lease options in the portfolio?
No, none. I've done a few options that I didn't exercise in the end. Like I've done a few options on commercial buildings as well, which I took through planning and didn't exercise. But no rent to rents. Been close. I nearly got a rent to rent on a commercial before, and we didn't even know it was rent to rent at the time. But yeah, none. Everything that we've got and done has been purchased.
Is there a reason why you don't do it, or just something that you've never really got into?
Yeah, just again, it's just spreading yourself too thin into too many different areas, and the problem, the challenge I had, I don't like saying that word problem because there's no problems, only challenges. But the challenge I had at the start was that focus, like at the start, the thing is, when you get a bit of momentum, the more momentum you get, the more offers the more opportunity you get. And Steve Jobs says it's equally as important as what you say no to is what you say yes to, even when you know you're capable. And I tried, so when I started getting a bit of momentum, before you know it, we was buying sort of 3 properties a month. And I was getting more and more momentum. So then I was doing commercial conversions, trying to do HMOs, then trying to set up a lettings company at the same time. Then I partnered with a builder to try and create a building company at the same time. Then I was buying properties for investors in the south, just a complete hands-free package. And I was trying to do all these at the same time, and it spread me far, far too thin and just nearly collapsed me, I really had to take a step back and reorganize it. It took me up to 2019 to really start undoing some of the messes I've made from really trying to expand too far. Looking back over it, would I do it the same again? Absolutely not in hindsight, but hindsight's beautiful. Even at the start of it, I knew the theory behind don't spread yourself too thin. I remember learning like do the 70-20-10 strategy, which is fantastic. Like 70% on the main strategy, 20% on secondary, 10 on the third. And when I stick to that, it works well because I can't stick to one. My mind definitely, I can't just do one thing. But even though I knew that, even though I've got the concept behind that, you can't like opportunity and like we're emotional beings and we justify it logically afterwards. And no matter what anybody says, money is an emotional thing. So when you see an opportunity, you're like, oh yeah, and you just in your head you start, oh, I'm sure I can squeeze that in, and yeah, that even though I know the theory behind it, I'll make that work. And it's not until you're in the thick of it, not having no sleep and pulling your hair out, that you start realizing, wow, like I can't. But the problem is the emotions then are really high and you realize you can't. And then when things are going well again, the emotions are, I'm invincible. And you really have to have a real self-awareness. So yeah, I looked at it a few times, but at the time when I was looking at it, probably spread myself too thin at the time. And I didn't have the time and effort to make enough of an understanding of that. But I'm open to them if they come along, but not something I massively actively chase.
Yeah. Okay. I've actually got a question here from Jamie on YouTube. What's your advice for building a refurb team when investing remotely?
Networking is, again, I said it earlier on. So social media is the most powerful tool. Whether you're doing it locally or remotely, is the most powerful tool. People, whether they're builders, like work with people they know, like, and trust. You'll get to the top of the builders list if you get along with that builder. And if you build out your profile, this don't only work for builders, this works for everything, for investment, for solicitors, for builders. But here's an historic example. I remember Theo, a mutual friend of ours. I trust Theo. I met Theo because of my online presence. Theo was like, I'm from Stockton, from Teesside. Do you want to meet up? So I met up with Theo. We got friends. One day I needed a plasterer. Theo, you've got a plasterer. I know Theo really well, so I knew the plasterer would be fine. So sent him straight up to the job, done the job. I phoned the plasterer up at the end because I like to show him I pay well. Would you do us a favour, send the invoice to accounts at Grove Properties? He was like, oh, you Grove Properties? I was like, yeah. He went, oh, I've been watching your videos for ages. And he wasn't horrible to me. I spoke with him over the phone. He wasn't horrible to me. When I first spoke to him, he was more than nice. But as soon as he realised I was Grove Properties, obviously he was probably thinking that, yes, consistent work, another person to get in with. His whole attitude shifted upwards. Not majorly, as I said, he was fine before. But because he'd seen my profile, because he'd seen I was actively buying houses, I was actively doing what I was doing, that shifted with him. And so then that built a relationship with him a hell of a lot quicker than it would have done me doing 3 or 4 jobs with him and building it up over the phone or even in person if you're locally. So the biggest advice is get online, get in Facebook group. I think Facebook's the most powerful place for this because there's communities already existing. If you go on LinkedIn, YouTube, Instagram, most of these you've got to build a following. If you go on Facebook, there's a following already there of your audience, and you can go to Doncaster, Stockton-on-Tees, all these areas. If you type in that area and property, there'll probably be already a group accumulated. Or if it's not direct that area, it'll be an area around that area that's accumulated. So you just go in there, ask questions, network with people. If you've got a bit of a social proof of what you've been up to yourself, that then gives you more credibility to negotiate with these people and then want to work with you. So yeah, building out your personal brand.
Great advice. Great advice. Yeah, I mean, I've built my business on Facebook. I say it all the time. I've built my whole business on Facebook, and without spending fortunes on paid ads either, compared to what we've brought in. So super important. Last thing I want to touch on is obviously you're sat behind a shelf full of books and a whiteboard with some writing on. So I know, like myself, you're well into educating yourself and personal development and helping others as well. When did you kind of start that journey, and I guess why do you believe in it so much?
Yeah, so in 2013, so again, as I said, I've always been kind of entrepreneurial, not always successful. Like any entrepreneurial ventures, even to this day, I've got ones that work really well, some that don't work so well. It's part of the journey you've got to get used to. But I've always been entrepreneurial since a kid, and at school we grew up with like hardly any money, and I had no choice. If I wanted to be in with my friends, I had to do other things to try and do that, from trading BMX parts and whatnot up to being into a property investor. But I bought my first deals without any education. It just didn't know any different. You don't know what you don't know, so I didn't know there was this education out there of anything. So just wanted to get into property, started my first journey, didn't learn anything. Like educate myself, and I think, as I said, my third deal started going on the internet a little bit, but still didn't know anything about social media or anything. And then because the properties in the north was doing so well, I got coffee again. This is that shiny penny syndrome. My friend from the north had sunbed shops, and because his sunbed shops were doing well, I was playing golf with him, and I was like, wow, that looks good. And I found a shop locally that would have been good for a sunbed shop. And I said to him, do you mind coming along with me, like viewing it? Because I never viewed a commercial building at this time. I'd only bought a handful of single-let properties. I think I had about 5 single-let properties at this point in that piece of land. I said, do you mind coming along? This was nearly my first rent-to-rent as well, funny enough. So I went along to lease this property. I was going to turn downstairs into somebody. He was like, wow, that's a great location. Upstairs was an empty space. And the reason it wasn't letting as a property, because the money they wanted for it, and the upstairs was a really empty space. Not a lot of people wanted that upstairs space. The previous people had that as a workshop, and not many people wanted that as a workshop. But he was doing his house out, and I was like, wow, we could split this into rooms and rent this out like as rooms as well. And I said, would the owner allow that? And they was like, yeah, they would allow that, but you've got to show us what you want to do. So we put the application in, we got the plans drawn up, and the owner nicked my idea last minute. So I'm then out trying to look for this sunbed shop, and I stumbled across another shop, which was a little coffee shop opposite the tube station in Hornchurch. And I was like, oh wow, like my friend, this is just how my mind worked. My girlfriend always worked in the food industry, and she really fed up with her job. The week before, they were saying, she's nearly walking out of her job. She worked in kitchens and catering. And I see this little cafe sort of / coffee shop. And I was like, oh, wow, do you want to chuck her in now? I'll get it. I'll do it up. But she can run it. And it was like, yeah, she's up for it. He was up for it. She wasn't. But anyway, I've got this coffee shop and getting going. The sole purpose behind this coffee shop was to earn more money to get deposits for these properties in the north, because I was really, really hooked on that. But anyway, the long and short of it was, day 1 she gave up. Day 2, I'm in there Googling how to make a cappuccino, because one of the researches I'd done was the guy run it really well, and a guy won the lottery, bought it off of him, and he thought it was easy just buying it. He didn't realise you had to run it, and he run it down because he was inconsistent. So in my head, I'm thinking, I've got to stay consistent with it. So I'm in there opening it, and anyway, long story short, it was a disaster. It put me in a massive financial and well-being hole as a result, and it took me further. It took me about 2 years to start buying property again. So in between that time, I'm like, right, I'm going back to the internet. Property is what I love. I've got this massive hole mentally and financially. I'm really going to take this a bit serious. And I stumbled across multiple streams of property income by Rob Moore and Mark Homer. And I went along to there. It was a 3-day event in London. And I was like, wow, it blew my mind. It was too much. It actually gave me massive overwhelm and gave me some other issues to deal with in my mental health as well. But it was a massive game changer for me at the same time. Hadn't read a book at that point. No, I had read my first book just before then, but I left school slightly dyslexic, not being able to read. And I had read my first book, I think, around 2010, but still didn't, you don't know what you don't know. I didn't know what books to read. The internet wasn't there. But I went to this multiple stream of property income, and they're talking about a compound effect, 4-hour work week. And I was like, wow. And from that point onwards, it's been like a kind of drug to me. I just got downloaded Audible. I jumped straight on the course with the HMO Daddy and Mark Homer. And from there onwards, I've just been a constant advocate of self-education. And that was a real pivot point in my journey.
Yeah, no, it's, I think one thing that resonates with anyone that, I've had a lot of successful people on the podcast, including yourself, and everyone seems to be, well into self-development, well into, getting ahead by getting information and then taking action on the information. So, a little, as I say all the time, success leaves clues. So there's a little clue for anyone that's maybe starting their journey is, we all invest heavily in ourselves and in our personal development. It's part of my business plan every year. Not that I write business plans, but, part of I will spend a certain amount of money on, X, on education and, where I want to go, depending on where I'm at that time. And I think it should be built into everyone's business, just like you're building, your marketing costs or your agency costs or whatever it might be. It's got to be a part of your business. But
yeah, it always puzzles me when people don't know, because ultimately, if you go to any business, you'll train. So this is no different. Like, people feel they can just start a business up without any training and just use their instinct, myself including. I've just got into a hole by doing that. And but the big, like, if information alone, like back when I first started training, information wasn't as abundant as it is today. Today, information is abundant. If information alone was enough, everybody be in the shape they want to be in, they'd have the relationships they want to be, they'd be as happy as they want to be, and they'd be as rich as they'd have the finances they'd want to have. Because you're one Google search away from telling, you could have Richard Branson telling you what to do on YouTube, you know, or Donald Trump, like whether you like him or hate him, the last president of the United States. Information's there. When you pay attention. You make a different commitment to it as well. So I invest in myself all the time. I love free stuff. I love reading. I'm not constantly reading. But when you pay, you definitely get a different value from that, and a different commitment and a different accountability.
Yeah, no, 100%, 100%. So, listen, absolute pleasure to have you on, and you know, there's no doubt we'll continue talking offline as well. How can people get in touch with you if they do want to reach out to you?
Best places across my social medias. Harvey Grove Properties is the main place. That's how I'm trying to brand myself now. But Harvey Grove Properties is you'll find me on all the handles pretty much. But my Facebook community, the remote property investing community, is probably the one I'm sort of more actively in, sort of thing. But I'm on all of them. Instagram, yeah, you find me with Harvey Grove Properties.
Super duper. Thanks again, buddy. Thanks very, very much. It's been an awesome episode, and I'm sure everyone has got great value. If you have, please leave us a review, a few comments. That'd be awesome.
Thanks, Ryan. As I said, I'm not massaging your ego or blowing smoke up your ass. It's been absolutely great getting to know you. I'm really in massive admiration of what you're doing. Keep the good work up. Keep on trailblazing and putting that positive sort of example out for everybody, mate.
Appreciate it. Thanks, buddy.